Hello and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will connect with our experts. And today, onto the Buy Now, Sell Now lens, we're going to be focusing and deep diving into the IT space after the TCS earnings. What is the expectation from HCLTech as Infosys as well? We will talk more on that. But before that, let's have a look at what the markets are up to. So Cheryl, in the last half an hour or so, a decent recovery coming in for the benchmark indices.
Very good morning to you, Shrishti. Actually, it's been a very flattish move for the market since the word go. We actually opened on a flat footing with a positive bias, slipped a bit into the negative territory. From there on, we've actually tried to recover those gains. But as you can see on your screen, flat trade coming in for Nifty with a positive bias. If you look at Nifty Bank, that's outperforming the benchmark indices, 0.3% uptick coming in for Nifty Bank as we speak. If you look at the advanced decline ratio as of now, it is tilted towards in favor of the gainers. But talking about the benchmark, yes, flat trade with Nifty holding above 19,800 mark. Let's talk about the gainers at this point in time. You have Coal India, BPCL, Maruti Suzuki, NTPC as well as Bajaj Auto. They are the ones that are gaining in trade, while on the flip side, and if you look at losing in of the markets right now, so you have it's TCS that is reacting to its numbers, the commentary coming in from the management, 1.5% downtick coming for TCS. Cipla is down about 1%. Infosys in anticipation office numbers also looking at what TCS has done. So you have Infosys that's down about 0.9%, and Tech Mahindra and Bajaj Finance are the other set of losers at this point in time. Talking about the sectoral indices and what it's doing right now, you have the IT index, the top sectoral loser. You have realty index that taking it easy in today's trading session, 0.3% downtick coming in for realty, FMCG and pharma are the other set of losers. Well, on the flip side, metal holding pretty strong in trade along with the media index. So that's the way how the markets are looking like at this point in time, Shrishti. But yes, definitely all eyes have to be on the IT players, especially TCS, who's already come up with numbers, Infosys and HCLTech, who will come up with numbers today.
Yes, talking about the IT space today, the biggest drag on the space is definitely TCS after a mixed set of earnings rather and the announcement on the buyback. So let's go and understand from our IT expert. Anisha is joining us live in the studio. So Anisha, mixed set of numbers coming in from TCS. So how are the brokerages looking like and saying about the company as well as what's their take on the buyback?
Buyback is a bit of a miss versus expectations, so I'm guessing that's why a lot of the analysts might be supporting the view that you should tender in the buyback, because in the near term the valuations will be capped. That's the brokerage verdict coming in, that there is a near-term uncertainty, near-term weakness, and on account of that expect Q3 to be a bit weakish. The big question of course has actually moved on to FY25, because the holders or the investors of the stock have pretty much given up on FY24, given first half is usually better than the second half and the first half has already been quite disappointing. So yes, FY24 is going to be a bit of a washout, but what about FY25? Because the deal win momentum has been very strong, and that's why I was expecting there would be some sort of buying which might come in towards the lower end of that range of the stock. Hasn't happened yet, because maybe they're waiting for that further weakness to continue into Q3, given it's a seasonally weak quarter. But as you pointed out, it was a mixed set that TCS reported. Big beat when it comes to the margins. There was a big positive coming in from the UK growth as well, which was around 10.7%, and then of course buyback, a bit of support coming in. In terms of the negatives, the headcount declined quite sharply by over 6,300, and that tells you that perhaps the company is not too confident about the near-term uncertainty with respect to when the recovery is going to be. Otherwise, they would have added the headcount to execute as well. They did point out that a lot of customers are looking at reprioritization. They are not cancelling the orders, but there's a lot of reprioritization happening, as well as pause in terms of project execution. That's having an impact. Net, I think the valuation at 27 times forward earnings is something which is going to be a limiting factor. The stock has done all right. If you look at it on a YTD basis, I think it's up in like double digits. So it's done okay for itself. But from here on, the upside will be capped, because there's no fresh trigger for anyone to buy the stock.
Right, absolutely. In fact, Anisha, earlier on, you actually spoke to the management of TCS. I'm going to say HCLTech. TCS. That will also happen. I'm sure you're the only one who's busy, and I think you're the only one who will be the happiest among the research team, because all your top major companies will be done with earnings, while everyone will just get started. But you just spoke to the TCS management. Definitely, they did say that they're preparing for the helicopter shot winning. But let's let's hear out the commentary coming in from the management when it comes to the revenue, the top line, the margins, where they see it headed from here on. Then we'll talk about Infosys and HCLTech with Anisha.
See, to some extent it's broad-based, but we've been explaining it last quarter also. Okay, the trend is same. Essentially, clients want to invest in newer technologies. So technology adoption is very high, and given the macroeconomic uncertainty, there is also a lot of request towards cost optimization projects. So we are able to sign new projects, and the project that we sign, we continue to execute them, and they yield the revenue as planned.
All right, so that was the management commentary coming in post their earnings. But as promised, Anisha is still with us and she's going to talk to us what she's penciling in or what the street is penciling in when it comes to Infosys as well as HCLTech. Today is going to be a very heavy day for all of us in the evening, isn't it? And I thought IT sector will spare us with the IIP and CPI. It doesn't look like.
Oh, you have IIP and CPI?
Oh, yes,
as well.
exactly.
So very interesting. I think 4 to 6 is going to be a band that you want to stick to ET now because there'll be a plethora of news flow coming in. But at least let me brief you as to what you can expect from Infosys. The numbers are expected around 4 p.m. because the press conference is 4:30. It's expected to be better than what TCS reported. However, after the kind of surprise revenue decline that came in from TCS, you can't, rule out the possibility of a decline from Infosys as well on top line. Given the low base, we are expecting a 1% growth on constant currency, dollar and rupee terms broadly. Margins are expected to expand by almost 20 to 30 basis points. That's because the company has deferred and delayed its wage hike. So that impact is not likely to come this quarter. Plus some efficiencies will kick in. As a result, the profitability should jump up somewhere between 3 to 4%. The bigger question, of course, is going to be the guidance. A sharp cut was already done last quarter. 1 to 3.5% is where it stands. Any revision to that is something that you need to watch out for. And of course, the commentary going forward, headcount trend was quite disappointing for TCS. Is it something that happens for Infosys or not? Deal wins has not been a worry for the entire system, so that will be very strong. But of course, you'll have to watch out for the commentary. Quickly shifting to HCLTech as well if I can, because that number is expected somewhere between 5:30 to 6:30 p.m. The expectation is that it's going to be a good set. 1.4% kind of growth is what we are envisaging at the top line level. The margins are expected to expand by almost 60 basis points for the number to come in at 17.6%, and that will drive the profitability higher by 5%. Remember, for HCLTech, there was an inorganic acquisition that they had done, so that will support the top line. Having said that, there's a very wide range as far as constant currency expectation is concerned. So let's see what they deliver. Again, they had also given their guidance of 6 to 8% growth. Whether they're looking at maybe narrowing that or any change to the guidance is important to track. Commentary about FY25 and the margin, how did they stick to the 18% margin band is something that we'll have to watch out for. So lots of questions. Let's see how many of them get answered today evening.
If not today evening, I'm sure you'll take them tomorrow, isn't it? With the management.
I'll try to. Let's see what they deliver.
But definitely, guidance will be the key to watch out for both of these companies, because for Infosys, we have seen that cut happening. So let's see if there's a fresh trigger or not, because for TCS, you said that there wasn't any fresh trigger and that's why the decline. But thank you so much, Anisha, for joining us today on the studios and helping us find out that what exactly that the street is penciling in for the upcoming IT companies, that is Infosys as well as HCL Technologies. Anything, Cheryl?
Yes, absolutely. I wanted to introduce Kunal as well, who is here with us to talk about the earnings and also the IT sector as a whole. Along with Kunal, we also have Sneha Poddar joining us on the show. Very good morning to both of you all. Thank you so much for joining us on ET Now. And I like how Kunal was patiently waiting for Anisha to talk about the TCS numbers, Infosys as well as HCLTech, what we're expecting. So Kunal, you can go first and tell us, among the IT pack, which one are you betting on? I know it's very difficult technically to chart these companies given the fact that they will be moving on news flows, isn't it? But on the charts, how are they looking for the medium term at least?
No, frankly, I think I was actually glued towards the conversation at the point when you said 4 to 6 p.m. you guys have to work hard and 3:30 the market closes. So
We'll make sure that today we call you to give the instant analysis, or at least on the charts for HCLTech and TCS. I'm going to make sure that Abhishek is listening to this and he'll note down, isn't it, Abhishek?
Thankfully, there is no technicals for IIP in inflation and everything.
Oh yeah, yes, that's
So,
true.
okay. So on the IT pack, largely, I think what you're seeing right now is a very sustained and a calibrated kind of an upward move for these large cap IT stocks. And I not call it today, but I call it from the September 2022 lows when TCS was sub 3,000 or 3,000 odd levels. Infosys was around that 1,200 odd mark, hovering at those points for itself. What we need to now see is that IT stocks from that 2022 September lows, they've done pretty well for themselves. So climbing up very gradually 10, 15%, 20% on large cap stocks. Many mid cap names have actually risen more than 40% or 50% from those lows. I think that's a hallmark feature, which means that there is an absorption capacity of any kind of a shock or negative news flow into these stocks. And I would probably believe that corrections like what you're seeing today for large cap names like TCS, etc. And in case if the correction leads to these stocks coming to their respective 50-day moving averages, I believe that that could be a very good buying opportunity. So my stance is bullish on the larger cap IT names as well as few mid cap IT stocks, and I believe retracement towards your 50-day moving average should be taken as a buying opportunity.
Okay, but any specific pick or any specific stock that is on your radar, Kunal?
So from the mid-cap IT name, Birla Soft is something which looks very attractive. That's a stock which I've been highlighting in a few weeks back also. I would believe that the stock should be able to surpass the previous highs of 2020-21 for itself. So Birla Soft is from the mid-cap IT space. You can also look out for larger cap names. I would be bullish on the likes of Infosys, even from current levels where the stock is trading 1300 plus approximately, and even Tech Mahindra. I think the stock is due for a breakout on the upside. So that's another large cap name to watch out for.
So TechM, Infosys as well as Birla Soft are the counters that you need to be looking out for when it comes to the technical outlook on the IT space. But Sneha, very good morning to you first of all, and what's your take on the IT space after a disappointing, rather not a great set from TCS? We are seeing the stock under pressure, but even all these large cap IT names just ahead of the earnings from the likes of Infosys, TCS are also reeling under pressure. So do you believe that there could be some surprise or some bit of a positive news when it comes to the guidance rather or the deal momentum from the large cap IT space? And where will be your preference? Like, you will go with the large cap names, or somebody can enter afresh in the mid cap space where you are finding opportunities?
Sure, very good morning. So as you mentioned, we know that the results would be a little disappointing because of the near-term headwinds. Clearly H2 would be we can't expect any great numbers in H2. But given the kind of deal flows that these companies had been witnessing, clearly the outlook for FY25 becomes quite bright. So all these the new orders that these companies are winning obviously provides a good revenue visibility for FY25. That's why I have a hope that in FY25 the numbers would largely bounce back, especially on the low base. And moreover, if you look at the valuation front, so valuations have corrected meaningfully over the last 2 years. We are quite positive on the IT service industry from the medium to long term perspective. As a near term pain, obviously, as I mentioned, in H2 would continue. So we prefer tier one companies because there the visibility is quite clear in terms of deal wins, and plus the valuation comparative to the mid-size IT companies is much more comfortable. So the 1 year forward like average P for the tier one companies is anytime around 2025 compared to the mid cap IT companies, which is trading at a sharp premium. So we prefer tier one IT companies, and therein TCS remains our top pick because clearly we see TCS. The revenue visibility is much more stronger given the large deals that TCS has announced over the last in H1. We prefer TCS in the overall tier one space. If at all one has to look at tier two companies, then we prefer Signed because we expect good performance from the company given the overall revival in the aerospace vertical and the easing challenges in the from the railway and the communication side, wherein the company has a strong presence. So Signed in mid cap space and TCS in the large cap space.
That's a pick coming in from both of our experts when it comes to the IT sector, be it the mid-cap space or the IT large-cap space. But on that note, we slip into a break on this edition of Buy Now Sell Now. When we come back, we will start taking your queries, so don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Remember, viewers, you can connect to us on the WhatsApp number that will be flashing on your screen very shortly. Do remember that to mention your name each time you write to us. Mention the stock that you're looking to invest in. If you've already invested in a stock, mention the buy price, the quantity, as well as the time horizon that you are intending to stay in a particular counter, because in that way we will be able to direct your question to the right set of our experts. And talking about experts, we have Kunal Bothra today on the technicals, while Sneha Poddar is joining us on the fundamental analysis. A very good morning once again to both of you all. And let me kickstart with the queries then. And the first one that I have is coming in from Sunil G. He's writing to us from Muscat, and he wants a fundamental perspective on JK Tyre. He's purchased about 4,000 shares about 10 years ago, actually, Sneha, and the purchase price was around 50 rupees per share. Now he wants to know, makes sense to book out profits from this particular counter, or should he look to continue to hold on to JK Tyres right now?
Okay, he can partially book profit into it because he is sitting at a good profit, but the replacement demand of late has started picking up. So definitely the revenue visibility continues to be good for the company. So he can partially take a profit booking, and rest he can continue to hold.
Okay, moving on to the next one then. And Kunal, the next query is from Sunny from Kolkata. He wants a short-term view on ONGC. He wants to buy this counter at current market price. So will that be a good strategy? Because it's a very volatile counter given the crude price volatility.
Well, yeah, the stock gets affected by news flow in terms of or the trends in crude oil prices. But then I think largely ONGC has been a very docile or a moderate beta kind of a stock. Now, interestingly, in the last few months, the stock has shown very good recovery. It's managed to surpass levels of 150, 155, which was a major resistance, and then I think 175 has also been taken out very recently for the stock. So it looks very attractive. The only catch over here is that you have to have a longish term time frame for a stock like ONGC to deliver steady returns. But yes, it's a good part. It's a good strategy to have this as a part of your longer term portfolio. I would also recommend look out for names like NTPC as well as GAIL. I think all three of them as a combination, even Coal India, all of them, they are looking attractive. And for a change, we are seeing many of these stocks coming back into multi-year breakouts. So I would suggest to look out for the other three names as well.
All right. This next one that I have is coming from Nishi, writing to us from Bangalore. Kunal, I'm going to come to you once again because he wants to know about Bharat Forge. 100 shares. The price is not given, I believe, but I think there's a mistake in the price that he's given. So I'll skip that. He's also asked me about PNB Housing. He has about 230 shares after averaging at a price of around 750 rupees per share. He wants to know what sort of a target should he actually look at for PNB Housing right now.
So PNB Housing, I would be bullish on the stock, and I think it's trading at 730 odd mark. It's still way off from its lifetime high levels. I think 1400 or 1450, 1500 approximately was the lifetime high for PNB Housing. It started to show signs of good recovery. So I was looking at the quarterly chart sometime back, when the stock scaled past about 525, 550 mark. And from there, the indicators started to get into positive momentum for PNB Housing. As I said, that it's significantly off from its previous major lifetime highs of 1500 for PNB Housing, but the stock has this momentum to try and come back to those levels. So I would advise to buy at current levels, and in case if the stock provides any odd correction, because it's a high beta stock, high beta natured stock, it'll probably get into the 10-15% correction every now and then. Try and take advantage of that as well.
Okay, moving on. And Sneha, the next query is coming in from Kamal Bhatia from Delhi, and he wants an advice on two counters. Firstly is JSW Energy, holding 600 shares from a price of 266 rupees, sitting at decent profits in this one. And he also has PNB, 2000 shares at a price of 59 rupees. Whether to hold both of these names or book profits in any of these, what will be your advice?
Okay, he can hold on to both these names because JSW Energy would continue to benefit from the kind of investment that the company is making on the renewable side, and the electricity demand continues to touch new highs month after month. So obviously the future is quite bright for JSW Energy. If we talk about PNB, the bank has been reporting very good set of numbers. The asset quality has improved tremendously for the bank, while the cost the cost remains quite moderate for the cost of funding remains moderate for the bank. So overall, we are quite positive on PNB, because the overall loan growth has been tremendously on a high scale, and this bank is expected to report very good set of numbers in Q2 as well. So definitely a hold on both the names.
All right. The next query that I have is coming in from Rima from Mumbai, and Rima wants to know about a good stock that she can do SIP for the long term, about 1,000 rupees per 10,000 rupees per month is what she's intending to put. She wants me to ask this question to you, Kunal, but I will ask this question to Sneha instead, because it's long term, it's SIP based on fundamentals, especially if you're investing for a longer period of time, isn't it, Sneha? So it's keeping in mind the fundamentals, the long-term perspective, which is that one company that you think that she should look to do an SIP of 1,000 or 10,000 rupees per month, or do you think she should split it and put it in multiple other companies?
Okay, if it's 10,000 per month, I would suggest she can invest in 2-3 companies. So she can look at one from the consumption space, that is either Titan or Tata Consumer. Both have a very consistent past performance, and even going ahead, I mean, the kind of opportunity that both the companies present is undoubtedly present a very bright future for them. So either Tata Consumer or Titan from the consumption space. From the auto space, one can look at Tata Motors, as the valuation is really attractive at these levels, and the kind of investment that the company is doing on the EV side. So they're trying to really gain the market share and the top slot for them. So Tata Motors would be my another bet. And third would be from the financial space, wherein one can look at either HDFC Bank or the Bajaj Finance. Both are elephant in their space, and they have really the kind of potential that both the companies hold is tremendous. HDFC Bank would benefit from the merger. The synergies would really play out over the next 4 to 5 years. So either HDFC Bank or Bajaj Finance. Bajaj Finance, post its rollout of the app, would tremendous benefit from the digital play. So either of these companies, one can definitely look from the SIP perspective.
Okay, so those are the top recommendations coming in from Sneha. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back. Welcome back to Buy Now Sell Now, show where we get you answers for all your stock related queries. And today onto the show we have Kunal as well as Sneha with us to guide you better. And Kunal, coming to you for the next query. I know that this must not be in your coverage list, but this query is on Amba Lal Sarabhai. The question is from Rajesh, and he's holding 250 shares of this particular stock from a price of 44 rupees, holding since the past 2.5 years. Must be a small cap company. Wants to know that can he hold this counter for a long term, given the chart pattern right now, any volume buildup that we have seen in this particular name?
I don't track the stocks, Srishti, so even can't locate the name of the charts, for the stock, whether it's on NSE or BSE. So I'll skip this one.
Okay, no issues. But moving on then, let me take the query from S. Balaji. Sneha, he wants an advice on IB real estate. He has bought this counter at a price of 78 rupees, what he's saying. So wants to know that what's the outlook on this particular name?
Okay, IB real estate, I would suggest that he can look from the short-term perspective, given the kind of development that is happening on this counter. So basically, these the Prestige and the the Prestige has most probably taken stake in the company. Basically, the company is seems to be coming out of the trouble, but then clear cut the visibility is not there from the long term perspective. So probably as a short term idea, one can still play it out and gradually book profits in this counter.
All right, the next query that I have is coming from Ravi Chandran, who's writing to us from UAE. 1,500 shares of Hindustan Media he purchased at 77 rupees per share 3 years ago. Now he wants to know whether he should exit or Kunal, should he stay put for at least 90 rupees per share mark for HT Media, and he's really making heavy losses given the fact that the stock has definitely corrected. If Abhishek, if you could pull up the chart at least for this year or at least 2-3 years for this particular counter, you can see it's actually corrected. I'm not sure if this has adjustments also to it, Kunal, but what's your take on HT Media?
See, ideally I would have recommended to exit the stock even if the stock has fallen and become 1/10 of what it was maybe I think a decade back. So 2010, 11 or 8, 9, the stock was almost at 260 rupees. I'm not sure again, as you said, that whether it's an adjusted price, but I would just look at the charts plainly, and from 260 rupees, the stock is 1/10 at current levels. Now, the only positive part which I can see on the charts for HT Media.
Actually, I'll come in here. It's my bad. I don't think it's HT Media, it's Hindustan Media Ventures. So if you look at Hindustan Media Ventures, that counter right now is at 81 rupees per share. So
Okay.
yes, I stand corrected on that front. It's not HT Media, but Hindustan Media Ventures, Kunal, and that stock is at 81. So given the fact that she's purchased at 77, should she wait now for 90 to come?
Yeah, I think you should wait for more upside, not just 90 for HMVL. I think that's the code for the stock on the NSE. I think again it's an illiquid stock, very high beta name, but just looking at the charts purely on the quarterly basis from 300, I think which is the high for HMVL in 2015-16, the stock had fallen to I think as much as 35-36 rupees, and is now showing signs of recovery. The good part is that on the quarterly charts, the stock has shown signs of a breakout of a swing resistance, and that could lead into a multi-quarter upside for the stock price. So 90 could be a possible target in the near term, but if you can hold on to it for another 4 to 5 quarters, I think there is a strong possibility that the stock may cross the 3-digit mark as well.
Okay, moving on, and Kunal, once again coming to you because we are getting a lot of queries on counters that we don't discuss much often, and the next query is on Infibeam. This particular counter has been showing good moves recently on a day-to-day basis, and B. Bhuvaneshwari has been holding the stock from a price of 18 rupees. What is the minimum holding period as well as target? Any target that you're spotting for Infibeam?
See, I think before I answer, it's very important for you to understand, for the viewers to understand that when you are looking at buying these stocks, don't look out for these stocks to convert into long-term holdings. You make your 50%, 50, or maybe percent kind of a return or 20% kind of a return, depending on your time frame into these names, or whatever is your expected target into these stocks, and you book profits into these names, or maybe book out majority of your profits and keep a very minor holding in case if you're looking to stretch your time horizon for these names. So with that as a caveat, I would look out for Infibeams on the short-term basis as a potential target in the range of 25 to 27. Now, the only positive part about the stock is the cumulative volumes the stock has seen in the month of September and October so far, and that jump of volumes has led to a significant jump in the stock price from 15 rupees to now 22 plus levels where the stock is trading, which means that the stock can see a potential upside further from current levels. But as I said, keep it as a trading pick rather than an investing pick.
All right. The next query that is coming in from a viewer who's asked this query to you, Kunal. Bobby Jacob has L&T purchased at 923 rupees per share. He sold it in the buyback at 3,200. Now he wants to know whether he should re-enter the stock at current price.
Yeah, I think L&T has to be part of your portfolio on a longer term basis. Now, even though the stock has gone through a very strong rally, but then L&T has been one of the stocks which gets into a compounding upside on the long-term basis. So all you have to look out for is start nibbling at current levels. The stock rarely provides a very sharp phase of correction unless the entire market also gets into a corrective mode. But I think if that's not the case, then I think you can probably make use of a marginal 5% odd correction. That's a good strategy to average or buy or add L&T further.
Okay, Sneha, the next query is on Federal Bank. This one is from Thomas from Kerala, holding 700 shares of this particular counter from a price of 144 rupees. Can he continue to hold on or book profits in this particular counter? He can stay put for the next 2 quarters.
Okay, if he can stay put for next 2 quarters, and definitely he should hold on because the business growth continues to be healthy for the bank across the segments, and even in Q2 we're expecting decent numbers. So overall, one can definitely hold on. In fact, one can look at this counter from the long-term perspective as well, given the overall good management and the kind of business strategy that they have in place.
All right. This next one is coming in from Chetan, writing to us from Bangalore, and he was holding. I don't think you track this counter. Garbi Finvest, Kunal. Before I even ask you the question, no, I don't think you track this one, right?
No, I don't.
Okay. Take me the next one. I'll take the next one rather. This one is coming in from Vijay, and he wants to know if it's good time to invest in Geo Financial for a period of 2 years. Sneha, what's your take on Geo Financials, and do you think it's the right time to invest in this particular counter? But because after the listing and the downtick that we saw post the listing, the stock is trying to stabilize right now.
Yes, so he can actually look at investing at these levels. So Geo Financial has got it is looking at investing in various business verticals, and over next few years we would see the investments coming, be it on the insurance side, be it on the consumer financing side. So there are a lot of opportunities which is present for the company, and in fact a lot would come from the reliance verticals only. So one can definitely look to invest in this counter at the current valuations, because it's trading at roughly near its book value only, and there's a lot of potential to the counter.
That's the take coming in on Geo Financials from Sneha. But with this, viewers, it's once again time to slip into a very short break. Don't go anywhere. We'll be right back to take more of your queries. Stay tuned.
Welcome back. You're watching Buy Now Sell Now on ET Now, show where we get to answers for all of our stock related queries. Let's continue taking your queries then. And this one is coming in from Ranganath Rao, Kunal, and this one is on Jay Balaji. I don't know if you tracked this particular counter, but this is the first time viewer of us. And he's saying that this particular stock has been constantly increasing since May. Now he wants to know whether it's good time to buy or wait for a correction. He's definitely admitting that the stock has seen a very good run, and there you go. From May onwards, you can see a sharp spike, 850% in the last 4 or 5 months. Kunal, what should he do?
Yeah, I think calendar year so far 850% is the return. I frankly don't track the stock, so I'll skip this one.
All right. I'm doubtful if Sneha also tracks this counter. Do you track by any chance, Sneha? All right.
No, I don't track.
Okay, go ahead, Srishti.
Okay, moving on to the next query then. Sneha, what's your take on escorts? A viewer named Varalakshmi from Andhra Pradesh has been holding 1,000 shares from a price of 2,356 rupees. So sitting at great returns in this particular counter. Whether to hold on to this name, she can continue holding this for the next 1 year, given the kind of run up, how the valuation stacking up, and what do you feel about the stock price movement going ahead?
Okay, so basically, the demand outlook remains pretty good for the company on the back of healthy agri sentiments, and the company should benefit from the kind of lower channel inventory that we have seen, and the company is making a lot of efforts to actually gain more further market share. So overall, we expect a decent volume growth for the company from next 2 years perspective, around 10% kind of volume growth, and this should actually be aided by the partnership that the company has formed with Kubota. So overall, we are quite positive on escorts. The stock has definitely run up a lot, and the valuation seems quite fair. So we are kind of neutral on the stock. One can hold or book partial profit, but then from a long term perspective, the picture looks quite good.
This one's coming from Hari Ayappan, writing to us from Chennai. Kunal, this one is for you. 8,000 shares of CG Power buy price is 37 rupees per share. He wants to know whether he should stay put with CG Power or look to book profits, healthy profits he's sitting on right now.
I think book out profits over here. The stock has seen an exceptional run from the 2020 lows. The worry for the stock is the recent correction the stock has seen in the last 4 weeks or 5 weeks. I think 450 was the high for the stock and it's now come towards sub 400 levels. So it's indicative that maybe the pace of rally could get a significant halt and the stock may see a decent correction. So I think it's a good time to book profits over here. In case if the correction settles say closer to 300 or 340 odd range, that could be a point where you may look to start nibbling to again.
Okay, Kunal, the other query that I have is on Avantil Soft. This query is from Ramesh and he's holding 50 shares from a price of 230 rupees. What I can see is that he's sitting at good profits. Though he's a long-term investor, whether he should stay put in this counter or book profits at this point.
Avanti feed, right?
No, Avantil Soft, AVANTL.
I don't track it. I'll skip it.
Okay, no worries. Cheryl, would you like to take it?
All right, the next one that I have is coming in from RK. And he's invested in these counters over 2 years ago, Kunal, and it's a slew of counters. He's saying over the last 6 weeks, he's seen a drop of about 7 to 10% in his portfolio worth for these counters. So the stock that he has in his portfolio is HFCL, EIH, Hotels, Credit Access, as well as AIA Engineering. What should he do with these counters? Because he just bought them recently. Now he's making loss over 7 to 10%. Do you think that it makes sense for him not to be perturbed about it and stay put with these counters for a longer term, or should he look to exit?
I think these are good stocks which you have. AI Engineering, I think we discussed a few days back also, and I mentioned that the stock has come back towards a key moving average. EIH Hotel also I think has come back towards a decent support point. So I believe that all the 4 names which you mentioned, they look attractive. Yes, these stocks have gone through a mild correction, but the longer term charts for these stocks, or at least the setup, still looks quite intact. So I'm hoping that this could just be a short-lived correction for these names and you can continue to hold on to these stocks.
Okay, that's the take on EIA Engineering. But with this, viewers, let's shift focus and let's start the rapid fire session and taking all your queries in the rapid fire session. Sneha, the first query is coming in from a viewer. He didn't mention his name. Amongst Aisha Motors, L&T as well as HAL, any of the stock that you are liking at this point in time for a fresh buy?
Both L&T and HAL.
All right, Imran from Kolkata wants to know about Mahindra Life. Kunal, what would be a better entry position for a medium to long-term player?
So I believe, I think maybe closer to 500 or 480 could be a good price to enter the stock.
Okay, Sneha, Gopinath wants to invest afresh in Gujarat Pipa Wow. What will be your advice?
I would suggest to avoid Gujarat Pipavav. Better to look at Adani Ports, especially post the recent correction.
Okay, Kunal, Sachin from Karnataka wants to know about Gillette. Can he look to buy this particular counter? Will it be profitable for him?
Illiquid stock, but I think it's a very good quality stock on the long-term basis. If you have a long-term time frame, hold on.
Okay, Kunal, Anisha is planning to buy ITC put options currently. Will that be a good advice?
I am not bearish on ITC, so I'll not advise doing that.
All right, Kunal, Manju from Chennai wants to know Archean Chemicals and Thirumalai Chemicals. Among these two, how are the short-term prospects looking for these counters?
Thirumalai Chemicals is something which I do track. Short-term wise, it's at a very attractive territory in terms of support. I would recommend to buy.
Okay, Sneha, what's your take on Polycab? Krish is looking for a fresh investment in this particular counter. Should he go ahead?
It's a very good fundamentals stock. However, the valuations have run up a lot. So probably at 5 to 10% correction, he can look at fresh investment.
Okay, Shaswat from Delhi has 100 shares of JK Paver. He bought it at around 325 rupees per share. Any short-term targets that he can look at to book good profits, Kunal?
Extremely bullish on the stock. You can look out for targets of 420 at least in the short term.
Okay, Kunal, any target for HEG? Sridhar is holding 57 shares from a price of 1745 rupees. Any exit levels for this?
If you can hold on to it from long-term basis, I would recommend to do that. And the targets on the longer-term charts could be more than 2,000, 2,500 plus.
All right, and with that, we come to the end of the rapid fire as well as the query segment. Thank you so much, for Sneha as well as Kunal, for joining us on the show and addressing all of your queries and talking about the tech sector in particular. But with that, viewers, we are totally out of time on this edition of Buy Now, Sell Now. It's a goodbye from Shrishti, myself, and the team that put the show together. But the 5th edition of India's most coveted startup conclave, Huddle Global 2023, is being planned by Kerala Startup Mission from 16th to the 18th of November in the state capital. Chief Minister of Kerala will inaugurate the 3-day conclave at Somathiram Beach, Chaura near Kovaram, and the event will see the conversions of global stakeholders, opening up vast partnership opportunities for the state's robust startup ecosystem. It will also bring together globally known startup founders, mentors, investors, industry leaders, and head of various government departments to deliberate on the whole range of issues relating to the startup ecosystem with a global perspective. The focal sectors will be augmented reality, virtual reality, fintech, life sciences, space tech, health tech, blockchain, IoT, as well as e-governance, artificial intelligence and machine learning. The event will have more than 10,000 participants seeking business, investment and partnership opportunities.
टिप चाहिए